Hi everyone! Yesterday, US stock indices managed to snap a two-day losing streak, starting a stellar rally. Such an increase occurred amid upbeat economic and earnings reports. Asian stock markets are also gaining momentum following optimism on Wall Street. Moreover, geopolitical tensions fueled by Nancy Pelosi's visit to Taiwan eased after she left the island. According to the report, new factory orders rose significantly in June. Equipment costs also exceeded expectations, while supply chain disruption and inflationary pressures did not affect the figures considerably. The PMI services index unexpectedly soared by the three-month high, rising to 56.7 in July from 55.3 in June. The buoyant activity in the U.S. services sector indicates that the manufacturing sector is also doing well. It means that the American economy has not slid into a recession. Despite concerns about high inflation, aggressive rate hikes, and shrinking GDP, the U.S. stock market surged on Wednesday amid positive quarterly reports. A risk appetite has not decreased, even though many Fed officials have backed further monetary tightening. President of San Francisco Fed Mary Daley favored a 50 basis point rate hike in September. She also noted that traders are too hasty when making predictions for rate cuts in 2023. President of Minneapolis Fed Neil Kashkari also believes it's too early to talk about rate cuts. Jerome Powell said earlier that the regulator may consider another large rate hike at its September meeting. The US dollar is unable to regain ground amid numerous hawkish comments by Fed policymakers made in the last 48 hours. The US dollar index dropped to 106.31 versus its main rivals. It appears investors are cautious before the release of the Nonfarm Payrolls report. The content of the report may help them determine the Fed's future plans on monetary policy. The greenback is likely to stay in the consolidation phase until Friday. Its growth was facilitated slightly by positive Servies PMI data. Nevertheless, it was moving in the downward channel of 106.25, 106.51 in the Asian session. The yen was unable to rise higher and retreated to 134.31, following an increase in the US dollar and the US Treasury yields. After a sharp drop in the yen, the shares of export-oriented Japanese companies climbed. It boosted investor sentiment. The Bank of Japan's soft monetary policy, which implies a moderate weakening of the yen, is beneficial for certain companies in the Japanese stock market. Analysts predict that the yen may approach 135 by the end of the third quarter and 132 by the end of 2020. In the Asian session, the dollar-yen pair was moving between the resistance level of 134.32 and with the support level of 133.40. The Australian dollar, which has a high correlation with the US market, regained bullish momentum. Apart from that, Australia unveiled upbeat macro stats. Australia's trade surplus remains positive. It means that export volumes exceed import ones. On top of that, the figure skyrocketed to a new record high of 17.67 billion Australian dollars versus consensus reading of 14 billion. However, there are some negative factors as well. The RBA confirmed it would hike the key rate at a slower pace. So in the coming months, the Aussie may extend losses versus the US dollar due to the widening rate gap. The Australian-American dollar pair may fall into the bear's claws. In the Asian session, the pair advanced to 0.6973. It was moving in the upward channel of 0.6936, 0.6976 amid rising oil prices and the consolidation of the greenback. We hope your trading is gainful. We make video reviews every day so that you can open only profitable trades. Today, the US will reveal its initial jobless claims report. Several Fed policymakers are going to deliver speeches. Subscribe to our channel and stay up to date with the latest market news. Feel free to leave your comments down below. See you!